Good day, investors. I'm Mike Smith, CFO of PSG Konsult, and pleased to have this opportunity to share with you our latest annual financial results for the year ended 28th of February 2021. I'm going to first of all take you through our group structure and overall financial results, then go through our divisional financial performance, some of our focus areas, run through some key returns and trading stats, and finally conclude. PSG Konsult group structure remains unchanged. We still have PSG Group as our anchor shareholder, and we've got about 3,300 other shareholders. We have three main divisions: Wealth, Asset Management, and Insure. PSG Wealth consists of the following business units: our Wealth Advisor Force, PSG Securities, PSG Life, PSG Invest, PSG Multi-Management, and PSG Employee Benefits. The asset management business consists of our asset management, single management business, our local and offshore mancos, and finally PSG Insure consists of our Insure advisory business, our short-term admin business, and Western National Insurance, which has an insurance license. PSG Konsult, which was established in 1998, is an advice-led business, and we have a very broad geographic footprint of advisors. We have our advisors are situated in 263 offices throughout South Africa and Namibia. And what we have seen during these volatile periods, the benefit of having an experienced advisor to assist clients through these difficult times, and you will see through the results that this has assisted clients achieve their long-term goals and objectives. The characteristics of the business: first of all, we equity market dependent. Substantial portion of the fees that we earned are linked to the value of the client's managed assets. Administrative and business and system dependent, particularly our platform businesses, where we have a lot of processes, systems, and people. Not very balance sheet intensive, very free cash flow generative. And then we have 23 regulatory licenses, so we are vulnerable to regulatory change. Just to give you a backdrop, some couple of key macro indicators. What one will see, although we had quite a lot of volatility in a number of indicators, for example, the Rand, US dollar, from the end of the year to FY20 to FY21, there was actually only a 3% movement, but that movement was quite substantial during the year. The JSE FTSE index actually gained by 30%. So although there was a sharp drawdown that occurred in March and April, where our clients have remained invested during that period, they've actually received good investment returns and outcomes. And the JSE actually outperformed the S&P 500, even in Rand terms, during the past financial year. Where cash only delivered a 4% return during this period. So I think it just illustrates the benefits of having a well-diversified portfolio. If we take you through our financial results, our recurring headline earnings per share increased by 10% during this year, from 48.1 cents per share to 52.7 cents, and we've achieved a 9% compound growth rate in recurring headline earnings per share over the past 5 years. Our assets under management increased from 230 billion to 268 billion, which is a 17% increase. That was achieved a combination of positive market performance as well as good client inflows. Compound annual growth over the past 5 years of assets under management is 11%. If we then move across to our divisional earnings, the Wealth division, which contributed 64% of the group's earnings, were up 19% and generated 448 million of earnings for us. Asset Management contributed 15% of our earnings. Their earnings were down 28%. Insure, which contributed 21% of our earnings, was up 24%, giving us overall recurring headline earnings of 704 million. We always like to look at our key metrics, and you'll see that we continue to measure our business against a consistent set of financial and operational metrics, despite having challenging economic environment. Particularly pleased to be able to demonstrate that over the past decade, we've delivered a 15% growth in recurring headline earnings per share, and we've also sequentially increased our dividend per share over the past decade, and that is up actually 11% compounded over the past 10 years. Our advisor force has increased on a compound basis by 5%. If we then move into the divisional performance, the wealth business, we started the financial year with 193 billion of managed assets, positive market movements of 25.4 billion, and net flows of just over 14 billion. Ended the year with 232.5 billion of managed assets. That's a 20% increase. In particular, we're pleased with the multi-managed business. One can see a 13 billion rand positive market movement, which illustrates that our multi-managed solutions have delivered very good outcomes for clients who've remained invested in those solutions during these volatile markets. And we also received 11 billion of flows in our multi-managed business, ending the year at 107.6 billion. Our third-party funds that our advisors have invested on behalf of clients ended the year at 73.6 billion, and our share portfolios that are managed for clients, combination of local and offshore, ended the year at just over 51 billion, giving us total managed assets of 232.5 billion. If we look at our net flows over the past 5 years, we actually brought in 62 billion rand of net new money over these past 5 years. This bar chart depicts the net flows that we've received into the business on a 6-monthly basis over this period. In the first 6 months of the current financial year, we brought in net flows of 6.3 billion, and in the last 6 months, 7.7 billion rand, which we're pleased to report. If we look at our advisor force on the wealth side, we ended the year with 563 wealth advisors, and actually during this financial year, 45 new advisors joined us, and we had some smaller advisors that left us, and those client assets were largely transferred to certain of the existing advisors. If we then move across to asset management, they started the year with 36.7 billion of assets under management. We had 3.5 billion of positive market movement, 4.9 billion of negative flows, ended the year at 35.3. The value of assets under management was down 4%. Part of this is linked to just the investment style and cyclical market conditions that we experienced during that period. If I look at then the asset management net flows over the past 5 years, we've also depicted that on a 6-monthly basis. In the last 6 months, we had 789 million of outflows. If we look at our investment performance, what we're pleased to see, promising performance the team has delivered, particularly over the past 12 months, with a number of our funds achieving top quartile investment performance over the latest 1-year period. If we look at the insurer business, part of the reason for our gross written premiums increasing by a lower rate than we have delivered in previous years is due to the premium relief that we provided clients during the level 5 lockdown period. But we've continued to grow our clients and premiums in this area. If we look at the insurer advisory force, ended the year at 369, so a very small change. If we look at Western National Insurance, this is our insurance business. they delivered very pleasing underwriting results, which is testimony to the solid underwriting management practices that we have in place within Western. And also on our shareholder assets, we delivered positive investment income results, particularly in the last 6 months, which contributed to Western's financial performance. If we look at our focus areas, we continue to focus on our top line revenue growth. As you can see, over the past 5 years, we have managed to grow our top line revenue over various economic cycles consistently. When we evaluate all of our business decisions, we focus on 3 key objectives. Number one, we focus very much on recurring revenue, and you can see how we've grown our recurring revenue and recurring headline earnings per share each period from FY17 to FY21. Our operating margin, we've managed to increase our operating margin over each period, and that's part of the scale that we've delivered in the business. We've managed our cost to income ratio, and that is despite fully writing off all of our IT costs and continuing to invest in the business focused on our long-term objectives. We've delivered a return on equity with 0 debt, just over 20% over each of these 5-year periods. And important part when we look at the business is considering the unit of risk we're taking relative to the unit of return that we're earning. If we look at some of the key return and trading stats that a number of investors use when evaluating an investment, with PSG Konsult, they started trading over the counter in 2005. Over the past 16 years, if someone had invested 100,000 Rand in PSG Konsult in 2005, and each time we paid out a dividend and reinvested the dividend, the investment would have grown to 4.4 million Rand, which is a 26.7% compound annual growth rate over that period in Rand terms, and just under 20% in US dollar terms over that period, in comparison to the JSE, which is delivered in Rand terms a 13.8% return, and in dollar terms 7.5%. Another useful stat is to look at the growth that we've delivered in headline earnings per share. So over this period, we've delivered compound annual growth in headline earnings per share of 19.9%, and if you exclude the amortization, 20.3% compound annual growth in recurring headline earnings per share, which aligns very closely to the growth in share price. And we've also highlighted in the slide the return on equity that we've delivered over this 15-year period relative to the consumer price index. Some trading stats. PSG Konsult, 9.5% of our shares traded during the most recent financial year, slightly up against the previous year. So one can see that there's been a reasonable level of tradability in our shares. In conclusion, some of the key business features that we have which underpin our expectations of future success. We've got a formidable advisor network in South Africa with a very broad geographic footprint that we continue to expand. We've got strong governance structures embedded in our business. We've got relatively small market shares, which gives us clear growth opportunities for our business. As I've illustrated on the previous slide, we have a history of delivering superior shareholder returns. And also, we're very much focused on optimizing our risk-adjusted returns per share. And as you can see, we've been very restrictive on the issuance of new shares and have very much focused on delivering the best risk-adjusted returns for our shareholders. I thank you to everyone for taking the time to listen to me, and you're welcome to contact me should you have any further questions on the results. Thank you.